Tom Staub here with BetterTurnkey.com. Taking a walk as usual. I just want to comment on a topic I've been asked about quite often, and it's Tom, how do you go about finding a market? How do you select the area that you want to invest? What drives that decision? And it's a valid question, right? I think a lot of people chase the trends and will find themselves buying in the Bay Area or New York or Seattle, areas that, yes, good jobs, a lot of things happening there, but if you dig down, there's a lot of metrics and fundamentals that just don't make sense for an investor, right? So there are other markets, right? Secondary, tertiary markets, and it can be, a complex equation trying to figure out what should I be looking for, okay? And some of the things that I often look for that have led to success is, one is the economy diverse, right? You look right now at this COVID and lockdown and you think about, what markets are going to get crushed? Vegas, parts of Florida, parts of Texas. And if you dig deeper as to what's driving that, it's the fact that, one, the economy is primarily concentrated in one or two industries. Okay. Two, the growth has been driven off those one or two industries across the board. And so, and there's many other factors, but ultimately, one of the key things that I look for is a diverse economy. Okay. So, two, I think you got to look at population, right? A lot of real estate, it's not. Look, I have tried to find complex books to understand the depths of real estate. And yes, it can be complex depending on what you're doing, but in general, it's not that complex, right? And a lot of it comes down to supply and demand. So what drives supply and demand in real estate? Well, population's a big one, okay? If you have 10 houses and you have 10 people, okay, well, then there's equal supply for the demand of owning homes. If you have 15 people the next year, there is a over demand for the amount of supply. My point is this, is that looking for markets and metros that either have a reason for people to move, have the infrastructure, the good jobs, tax benefits, things to do that people like to do, and that will spur that growth, are probably all indications that supply will be too small in the future. And therefore, markets that have population growth of at least 1 to 2% are stable, and above 2 to 3% are robust. So look for markets that have growing population rates, okay? And then three, I think you got to have infrastructure, right? And when I speak about infrastructure in real estate, I'm talking about, yes, jobs, but healthcare systems. Okay, is it a friendly tax code? How is the hospitals, the police, the fire, the schools? If those things are all sound, then you are probably in a good situation to increase the demand for people to want to live there. Okay, so again, diverse economy, which is huge right now as you're seeing in this COVID lockdown. Two, you need to have supply and demand, so population growth. And three, the infrastructure of the market. Okay? If you like what you heard here today, subscribe to the channel below. More coming.